The rich don't listen to Suzy Orman or Dave Ramsey because they play by a different set of rules. My name is Darius.
And I'm Carmen. We're actually really thrilled to talk about this topic today because it's really, it makes a lot of sense. And it didn't make sense to us in the interim when we were knee deep in Financial Peace University with Dave Ramsey. But as we started to learn more and read more and be exposed to more things, we realized like, wait, there's more to this money game than what we're just showed and previewed to.
Right. And that's the thing. As we were going through the different income levels, our mindset and our feelings changed about it, because Carmen mentioned that it was a money game. We didn't know it was a game when we weren't making any money. Our focus was to pay the rent, pay the bills, and make sure that gas is in the car. That's our main focus. So worrying about whether or not we had income to invest was the least of our worries at that time.
Last thing we even thought about. And it's important to understand this information because we meet so many people all the time that say, Darius and Carmen, if I knew this sooner, if somebody told me this sooner, and that's why we're here today. That's really why the Wealth Nation channel is here. If you all know the Wealth Nation channel, we actually talk about how to use life insurance as a platform to accelerate your financial goals. And we're going to get into that today towards the end of this video. But what we want to talk about right now is just understanding the options that you can take when it comes to understanding your finances. Because if we break everything down on an income level, different income levels operate differently. Right.
And we'll just speak specifically about ourselves. So lower income, we make less than $40,000 at the time. We were right out of college, and we had problems understanding how to manage our money. We had a spending problem. Coming right out of college, we want the nice car. We want to go to the nice restaurants. We were tired of the dollar menu coming from college. So the way we spent our money was different. We wanted to look good. We wanted to have on nice clothes. We wanted to have on name brand clothes. That's what our priorities were at that time. We had a spending problem. So for people, or those of us who had spending problems like us, we listen to somebody like Suzy Orman because she helps us better understand how to spend and manage our money.
Yeah, and also too, you realize if we're talking about our experience coming from college straight into corporate America, there's no like bridge gap. It's just you go from making no money to all of a sudden making $40,000 a year, and that's considerable when you go from being a college student.
Right.
And really trying to determine, okay, what do I need to do with my money? Right now, you're just thrilled to death that you get a paycheck.
Yeah.
And it has, 3 or 4 digits in that paycheck. You're just thrilled and tickled pink for that. Now, if we take the next step and we talk about the middle class, which is someone who makes typically anywhere between $41,000 and upwards up to $120,000 a year, there's different mindsets that come with that.
Right.
Because now maybe you're a seasoned professional, or maybe you make more money just in general out of the gate.
You have a little more experience. You have some more responsibility. So you're like, okay, I know there's certain things that I need to be doing, and maybe debt is a problem for me. I'm spending too much money, too much of my hard-earned money on debt. So then you would listen to somebody like Dave Ramsey, in which that's what we did. We did a responsible thing when we got married, and we started doing Financial Peace University, and that helped us better understand how to manage our debt, which is perfect for where we were. We needed to save money, and we needed to get out of debt.
And also with getting out of debt, we also realized that we started making more money and going like, wait a second, maybe we should do more with this money. Should we look into retirement? Should we look into life insurance? Should we start checking all these boxes that somebody somewhere says that you need to be doing? And we feel like that typically...
with minimum risk.
Yeah, and we feel like that typically happens in the middle class range, where now it's like, okay, let's be responsible. Let's do a few more things, take on a few more financial products so that we can say that we're doing it, but we may not completely understand what it is that we're getting involved with.
Right. And what we wanted to illustrate in this illustration that of what we experienced was that our mindset was different in each income range. So when we hear opportunities around us, we process those opportunities differently, because the information was always around us. We just weren't tuned into it. We weren't calibrated to it. Our mindset wasn't calibrated to that specific frequency to understand the benefits of the fact that we need to be copying what wealthy people are doing versus listening to other people who don't make who make the same amount of money as we do, because when we think about it, the friends that we have are friends from work who have the same income that we have. Yeah. So they can't tell us what to do with our money to make more money, because we're all in the same category.
Same boat. And it's interesting that you said that, because it really made me think about, sometimes you talk to your friends or your family and you're really into something and you're like, you need to be doing this with your money. And then they're just like,
they're deer in the headlights because they don't understand what you're talking about, because of the frequency that they're tuned into.
Yeah, play the cricket soundbite where it's just like cricket, like what in the world are you talking about? And you can see that they're glazed over, they're not like processing anything.
You have three eyes.
That's what we're talking about. So if that's you in this video, maybe it's your turn to start learning a little bit more as far as what you can do for yourself financially. Mm-hmm. And also this video could too separate the mindsets, the financial mindsets, because if you're watching this and you're like, no big deal. But if you're watching this and you're getting upset and you're getting fired up thinking like, man, what do I need to be doing? Then keep watching.
Right. Because one thing that we see a lot is the fact that when we talk about life insurance, people comment that you need to have a lot of money in order to benefit from it. But life insurance is something that we all need, because at one point all of us are going to die eventually. Yeah. So at the bare minimum, we all need life insurance. Mm-hmm. And we're guaranteed to die. So when we talk about using life insurance, we're talking about using something that we already need in the first place. So why not understand a more efficient way to use that particular platform?
Absolutely. And if you're thinking about that, then definitely click on the link below. A member of the Wealth Nation Concierge team would love to serve you.
Right.
Now let's jump into, so we talked about low income, then we talked about middle class. Now let's talk about upper class. Well, before we even go to the upper class or higher income earners, when you think about middle class, that's where a lot more financial products are available for you, in the sense of retirement products. Mm-hmm. Are we going to invest in Roths? Are we going to invest in IRAs? Are we going to invest in 401ks, whatever it is? But then you realize as you start to make more money, you may not qualify for a lot of these opportunities.
Because you make products. Too much money, yeah.
Yeah, so then how in the world does that play a part? Because now we're playing different games.
Right. And the difference in the the difference in the low income and the middle income is, once they, I guess, make too much money where they can't invest in some of those products, what they do is they get a team around them that can make their situation make things more specific to their specific needs. Yeah. When you're in a lower income bracket, what you have to do is kind of generalize the stuff that you need to do. So that's why you have like 401ks where everybody pool their money into, so that it can invest and everybody earn together, is because you kind of have to. Mm-hmm.
And also when you start making more money, you think about things differently. So you may want to get involved with real estate. You may want to get involved with cryptocurrency. You may want to get involved with the stock market. You may want to do whatever it is that you decide that you need to do. And to your point, Darius, you may need other professionals on your team to make sure that they have your back and that they're guiding you in the right places.
Right.
Whereas if you don't have a ton of money to invest, then you typically have to kind of go where the masses go and work with those products, because that's what's available to you. We're not saying that you need to do that, but that is what is offered when you think about from a general standpoint.
Yeah, and the biggest thing for us as we gained more income, our taxes went up also.
True.
So we can't imagine handling our taxes the same way we did when we didn't make as much money, because the amount of money that we paid in taxes is more than what the income bracket is for upper class. So that
who did we go to for our taxes? Was it it's one of the chains that's like, at the local strip mall. Who did our taxes?
Yeah, like H&R Block.
Yeah, one of those.
I used to actually do my taxes myself when I didn't make as much money, like the TurboTax.
And no shade to TurboTax or H&R Block, no shade at all. Where we're just saying that things change. Like as we started to make more money, we realized we needed a specialist in taxes, because they needed to understand all of the different games that we were playing with our money and how to organize those to make sure that we're paying less in taxes.
No, they need to put us on game of
that too.
They need to put us on game of the different games that you can play, because one thing that I hear more frequently as we start to make more money is the fact that people that have money don't pay taxes.
Yes. Like, wait, what was that? What was that one little nugget?
They don't pay taxes because they're LLC'd up. They have businesses where they can have more write-offs
expenses,
and
whatever.
expenses and things of that nature, where we didn't think about that when we didn't have the same amount of funds.
No, we were like, refund, please. Let me get that refund.
Yeah.
Now it's how can you not pay as much to the government?
Yeah, so it goes from a defensive stance to an offensive stance, or a balance between the two. And having a team around you allows you to play that game a little better, because there is offense and defense. Some may play a little more offense, some may play a little more defense.
Yeah.
And I think the less income you have, you try to play defense because you're trying to protect the money that you do have. That's why
it's a scarcity mindset. What can I hold on to?
Yeah, but you can't save your way to
a
millionaire. You can, but it'll take you a lot longer than if you invest that money and have that money working for you and bringing home more money as you're doing other things. And that's the mindset of people that make money, is the fact that they can make more money.
That's a really great segue, because that's really what I want to echo and to communicate through this video today. Is when you think about your money and what you want to do with your money, at the end of the day, those who make money put their dollars to work. Those who hold on to money and don't make much progress in life as far as changing the decimals or the commas in your bank account are just stacking money. And when you stack money in a savings account, for example,
inflation and taxes
will bite you in the butt, meaning your money is losing value, hence inflation. Every single day your money is losing value. So you have to make sure that if you have money in the bank, it has to be earning money so that you can beat inflation.
Right.
Or
because
keep up with
what's the tax bracket? If you make more than like $100,000, it's 34%. Don't quote me on it, but I know it's like 34%. So if you make $100,000, you got to give up $340,000 in taxes. Well, if you can figure out a way in having a business or having a team around you where you don't have to pay as much in taxes, whatever investment you have can't hold a light to you saving 34% of your income.
Yeah. And were you saying a millionaire? If you're a millionaire, you have to pay $340,000 in taxes?
Yes.
Because I think you said 100.
Yeah, I said $100,000.
I was like, wait a second. So you meant a millionaire. I was like, come on, Darren, you're the numbers person. You got me checking you.
Sorry, my bad.
But no, it happens. So the thing to keep in mind as you're watching this video, if you have money stashed in the bank and it's making you feel good, that's nice, but not. Good job that you've saved the money, though.
And it's good that you feel good.
Yeah, but you need to do something with it, because your money is, like I said, losing value, and you have to pay taxes every single year. So you need to make sure that your money is doing something, that it's out working for you. And that's why for us, when we started working through the Financial Peace University, again, no shade to Dave Ramsey whatsoever, we learned so much as far as just the foundational principles of how to budget, how to come together and talk about money, how to just understand our finances and our expenses. And we were able to come together and then remix it to what makes sense to us. So as we started saving and looking into these retirement accounts, we said, wait a second, that's not really what we want to do. And that doesn't allow us to make as much money as we possibly can. Right. Because we don't want to work in corporate America. We don't want to work in corporate America until we're 60, 65 years old.
Yeah.
We want to be able to control more of our money so that we can retire from corporate America early. And we retired from corporate America in our 30s, which was an amazing feat, because we said, we're going to own our own lifestyle, like we always say on this channel, and we're going to take ownership of our finances.
Right. And like Carmen said, no shade on Suzy Orman or Dave Ramsey. What we're trying to articulate to you guys is the fact that people that make more money don't listen to these individuals, because again, Suzy Orman is great for people who can't manage their spending. Suzy Orman is great for that. Dave Ramsey is great for people who don't want to take on risk or take on debt and to get out of debt. It's perfect for that. But when you start making more money, some of the programs that they offer you don't qualify for. So, for example, 401ks, like there's a certain point where you make too much money where a 401k really doesn't help you at all. So what do you do in substitution of that.
Yeah.
Well, you have to get with a group of people that can help you around your retirement, your estate planning, your taxes,
Just cash flow.
in general. You need to have a team around you helping you.
Mm-hmm. And what we really found through Wealth Nation and everything that we teach, like we said, we totally believe that cash value life insurance is the foundation that you can utilize to accelerate your financial goals.
Right. And we're not saying to invest in life insurance. We're saying it's a foundation that you build on.
Mm-hmm.
You build on that foundation.
Yeah, and to break that down with everything that we had said, right? So just to make sure that we have the framework. Once you start making more money, you have to play by different rules, because the retirement packages, whatever things that are out there as far as cash flow, may not be of value to you because you're making too much money. So when we think about what do we do with that money?
It's taxed, and then there's pre-taxed. Mm-hmm. So our retirement plans are pre-taxed, and some of them like a Roth are taxed up front.
Yeah.
So what we're saying is there's a different category that is no tax, that the ones that have money, that's what they do. So even if you have the right mindset, but your income isn't there yet, you need to be understanding what these people that have money are doing so that you can graduate into that different class.
And what we feel that class is utilizing life insurance. So for example, when I was going back to saying about don't keep your money in a savings account, what Darius and I do is we actually take our savings and we put it into a whole life insurance policy. And the reason being is because of a few things. The very first thing being is that if one of us pass,
we get a death benefit.
We get a death benefit. All we did was literally move our savings into a life insurance policy, and we get a death benefit. That was way more than the money that we had in savings.
Right.
The next thing is when we put our money inside a whole life insurance policy, that gives us a savings mechanism where if we need cash, if we need liquidity to access that savings, we can borrow from our policies and access the cash the same way we would a savings account, for example.
Which we do whenever we want to invest, when we want to invest in real estate, when we want to invest in some type of angel investing opportunity. Mm-hmm. We get that from our life insurance policy because, for one, when we borrow from our life insurance policy and the money that we pay back plus interest, we don't have to pay taxes on it because we already paid taxes on it. So what we do is we reduce the amount of income that we actually earn, and we pay less taxes on that gain.
Mm-hmm. And the thing when you think about it too, you can kind of, so don't quote me here. You can kind of compare a whole life insurance policy to a Roth IRA. And the reason why I say the only comparisons is because you're putting in after-tax dollars. Mm-hmm. You're putting in after-tax dollars to earn money. The difference between the Roth and the life insurance policy is the Roth, those funds are going to be invested into the market. The policy, the whole life insurance policy, there's no investment happening. There is a guaranteed rate of return, though, that is growing inside the policy, and you get a death benefit. And when you borrow the funds, you're not affecting the overall accumulation that has grown. Whereas when you borrow from a Roth IRA, you are affecting the accumulation. Right. So it's win-win all around, where you just literally take your savings and you move it into a whole life insurance policy.
A dividend-paying whole life insurance policy.
And then at that point you say, okay, what investments am I going to do? What other means of cash flow am I going to create for myself so that I can continue receiving funds? Right. And there's really no difference than what you would do with your savings, because we typically take our savings and invest when opportunities come up. But the only difference is we don't have a death benefit with that savings, and we're affecting the accumulation as far as how these products go.
So a good example of the difference between borrowing from a life insurance policy and borrowing for or getting the money from your savings account is this. Let's say I have an opportunity where I have $100,000 investment, and of that $100,000 that I invest, I earn 20% in interest. So that's $20,000 that I've earned. Now, the money that I got from our savings account, I'm going to have to pay capital gains on the entire $20,000, right? Right.
Yes, Darius, that is correct.
Now, the difference is when I borrow from our life insurance policy, I do have to pay interest back to the life insurance policy. And in this example, I'm going to say 10% because that's a nice even number.
Meaning that you would get a loan from
Yes.
your life insurance policy. So the difference is with the savings account, you just borrow it from the bank, whereas with a life insurance policy, you're actually going to get a loan from the accumulation that has grown inside your policy.
Right. So I borrowed from the life insurance policy $100,000. Now, even though I borrowed this money from my life insurance policy, the life insurance, because of how it works, it's not going to recognize the fact that I got a loan. So the nice thing about life insurance is that you still continue to earn interest even though you've borrowed money from this tool. Now, I invest my money into this investment, and again, I earn 20% in interest. I'm going to be charged 10% interest from the insurance policy. So what's going to happen is I paid the $100,000 back, which is the principal that I borrowed, and then I'm going to pay 10% interest on top of that. So that reduces my capital gains down to $10,000. So I'm only going to pay taxes on that $10,000. Whereas the rest of my money is still in the insurance policy. So what I've done is I've reduced the amount of money that I had to pay taxes on by half because of the fact that I used a different platform.
Mm-hmm. Yeah, and really it's just the nuances of understanding how to get a loan from your policy, pay it back, and all of that. Like I said, our Wealth Nation concierge team can definitely serve you. So if this is of interest to you, click on the link below. We would love to serve you. Then the main thing is just, again, realizing that we're comparing similar products, a savings account to a savings account in a life insurance product. Mm-hmm. Either way, you should be borrowing the funds, meaning the reason why I'm saying borrowing is because you should be paying it back.
Yeah,
right?
Even with your savings account, if you get money out of your savings account for whatever the situation is, you should be putting that money back.
Mm-hmm. So it's the same philosophy. When you borrow money from your savings or from your life insurance policy, you're going to pay it back. The difference with life insurance is there is a fee that's associated with borrowing your funds, but that's going to allow you to reduce the capital gains tax that you will have to pay. In addition, your policy is still growing. You still have the death benefit. And even though you are paying interest to the life insurance company, it's going to come back to you in dividends because the interest that you're paying to the life insurance company is helping the profits of the life insurance company.
Right. Now, we said all this to say that for different individuals in different mindsets, what they are opposed to is debt. So there's a difference between debt that you get to buy something that you don't necessarily need, but there's a difference between debt that you use to make more money.
Leverage.
Yeah. So one of the another distinct difference is we own debt. Debt doesn't own us. We use our life insurance policies to finance our things that we would normally get in our lifestyle, like our car, for example. We purchase our car using the cash value from our life insurance policy, and interest that we would have paid to the financial institution that financed cars, we pay back to ourselves. So that's the difference. Yes, we still have debt, but the difference is we own that debt.
And for those of you who understood that, that's huge. Owning debt versus having debt own you.
Right.
And then the difference, what we're talking about is consumer debt, where your debt is owning you. You're buying something that is now way more expensive than the original value of it versus you being the owner of that debt. So what we're doing is we're trading places with the bank, because right now the bank is owning your debt if you have consumer debt, because you're paying principal and interest back to them every month. And
that's another mindset shift, another mindset that's different from that of Suzy Orman and Dave Ramsey. Dave Ramsey is great for individuals that, like us, that were just starting our families, just getting out of college and having our first jobs and understanding how to manage all these different things that is thrown at you financially. Money isn't hard to find. There's always somebody that'll be willing to give you money for an interest rate. And that's what banks do for us. And it's really hard to manage that whenever you have some type of financial situation where you don't have the savings to protect you, where you don't have good debt management skills. Those are things that really trip you up, and that's why it's so important for you to listen to somebody like Suzy Orman or Dave Ramsey. And going back to what you were just talking about, so we're talking about individuals who struggle with controlling their spending, and then Dave Ramsey, somebody who's maybe got into too much debt and is trying to figure out how to pay it off. If you have either one of those principles, that's going
going to be something that's going to affect your banking opportunities as far as being able to own your own debt,
right,
and control your debt. So again, like we say, that there's levels to this. Again, depending on your mindset, the income level that you're at, you have to understand that there's always going to be an opportunity for you to level up your financial game and learn more and to take on more. So when we always talk about owning your own lifestyle or using life insurance as a platform to accelerate your financial needs, you have to realize that you can't bring along a lot of baggage with you, because you have to be able to curb your spending. You can't be in consumer debt, because that's going to rob you of your opportunities to be able to finance your lifestyle. So these are things that you need to think about, because we have noticed that people get involved with life insurance and they think that, oh, this is going to solve all of my problems. And it's not, because now you're just taking on an asset that's costing you money if you haven't gotten everything else buttoned up.
Right. So there's different people that own life insurance policies. There's people that think of it as a liability, something that they're just spending money to, and they're never going to use it
every year. Oh, that premium.
Because they're never going to die. Every year, the premium. But then there's other people who use life insurance as an asset, shout out to Caleb, an asset where they use it to finance their lifestyle. They use it as a tool.
And really, with any financial product, you have to realize that they are all tools, and they're not always going to be the end all be alls. You have to understand how to use those tools, because think about your tools that are sitting in some closet or some shed. Are they doing anything for you? Do you understand
Not
how to
until you use it.
Yeah. Do you know how to use a hammer or a screwdriver? Not until you use it. So for those of you who are thinking about getting
like
involved,
credit cards, we were horrible with credit cards at one point, because it was something that we kept paying interest on, because money kept coming out of our pocket. Now we use it as a tool. It's a tool. You use it. You don't pay any interest on it, regardless of what the interest is on the contract, because you pay it off every single month. So there's the same tool, but used two different ways, and it has a different result depending on how you use it. Same thing with life insurance. The same thing with life.
Yeah, the same thing with life. And the reason why I was making that point, though, is with anything that you get involved in, it's important to understand how to use those tools, because we get so many people that get the policy and go, okay, I'm just going to let it sit here. And that's no different from your hammer that's sitting in your shed doing absolutely nothing for you. And right now you need to go build something. Right. So you need to go figure out how to create cash flow, how to either pay off your consumer debt so that you can now take ownership over that, and just figure out how to continue to flip money, because money isn't going to turn itself. You have to make it work.
Right. And money also doesn't have any emotion. So the only emotion it has is the emotion that we tend to give it. So it's just black and white. We're supposed to use money to flow. Yeah. That's what currency is. It's the constant motion. And that's what money is supposed to be doing. It's a means of exchange, and we're supposed to use it to make more money. And then the money that we get, we're supposed to use that to make more money.
So when we go back to what we were talking about in the beginning, we were saying that the rich aren't going to listen to Dave Ramsey and Suzy Orman.
They're going to listen to their team of financial advisors to let them know what is the best move they should make with their money.
And the reason being that they're not going to listen to those individuals is because those individuals who listen to Dave Ramsey and Suzy Orman subscribe to different mindsets and philosophies and have different income levels. So when you are capped at your income level, when you're capped at your mindset, that is going to affect what you do with money.
And it's journalized information too, created to serve a group of people,
a greater group of
people instead of a individualized approach to your specific situation.
Yeah. So as you are dreaming and visualizing financial freedom and what that means for you and your family, you need to make sure that you start reading more books, you start watching more YouTube, definitely subscribe to the Wealth Nation channel if you're up for that, and just start exploring what you can do as far as how your money should work for you.
And surrounding yourself by people that make a lot more money than you do, because their insights are going to be different.
Yep. And that's where the exposure comes in, because now you'll start realizing like, oh man, I can invest in real estate without needing any money for myself, or I can do any investment ever without needing any money for myself. And actually, maybe I should never use my own money to invest. things that you just don't know until you're exposed to it. So the main thing that we want to make sure that you all get today is understanding there's levels to this game, and wherever you are, you know that there's always an opportunity for you to move forward. So what are you going to do about that? And if you are interested, then we want you to definitely check out our next video where you can learn how to create passive income to make more money for you and your family.
Remember to own your own lifestyle,
or someone else will.